Let's talk about market performance, which seems bearish even in the light of some of these Q3 results released. And also, it seems like profit taking seems to be taking place more sooner this time around. What's your take, David?
Yeah, we've been expecting profit taking around this levels. If you remember the last time I was on your show, I think I was saying that we could see resistance around 27,000, 28,000 levels on the NSE, and it's not surprising that at 27,400 we're seeing some of these guys take profits, and you know it's only normal. You wouldn't expect the market to go up in a straight line anyway. Some analysts have attributed it to maybe the floods in some parts of Nigeria, maybe expectations of higher inflation. We don't think that's the case. I think it's purely just profit taking from some of the market participants. You know, some of these stocks have seen over 100% rise. The banking sector, for example, we've seen over 70% bull run. You know, in the consumer space, we've seen about 30% movement in that sector. So it's not surprising that you will see some of the some profit taking on some of these names. If you remember the last time the market was around 28,000 level, it actually came down to 24,000 levels. We don't see that happening. You know, the fundamentals have changed significantly. Around that time, you had high loan loss provisions with these banks. This time around, we've got banks with cleaner books, with provision levels or cost of risk somewhere between 5 to 10%, or even less in some cases. You know, so with that in mind, I think that it's profit taking. We'll probably see the market retrace down to about 26,000 levels. Probably thereafter, we'll see the bulls come in again.
Right. Well, let's talk about UBA's results. I mean, they came in strong when we look at them yearly, those results, those numbers yearly. But we saw a decline in momentum when we look at those results quarterly. I mean, the stock price, however, performed quite well at 2.7% surge yesterday. What was your take on those numbers?
Well, with UBA's results, I guess it just shows that the market's taking out the positives out of this one. I think they did over 450% growth in year-on-year PBT. But what you need to look at is quarter on quarter, they're actually down 17%. You know, the reason why they were up over 400% on year-on-year figures largely was due to a low base, given the large amount of provisions that they did take in 2011. But this year around, if you look at the quarter-on-quarter numbers, obviously there's been a decline in momentum. You know, also the loan growth has been flat as well. But we did see strong drive in deposits, you know, which is quite good in markets like this. The cost of funding will be is quite low for UBA, you know, so obviously they can take advantage of higher yields in the market. They can afford to take advantage of some of these bonds and some of these T-bills in the market as well. Obviously that contrasts markedly with Skye Bank, for example.
That's right. I was just about to say that, David. I mean, a different situation in Skye Bank, also where we're seeing momentum actually picking up this time around. Gross earnings up to 94.1 billion naira.
Yeah, Skye Bank was, strong momentum, strong earnings momentum, strong figures as well year on year. Obviously, that's on the back of a 36% reduction in provisioning, and also a decline in operating expenses as well by, I think, about 6%. But obviously, if you look at it on a quarter-on-quarter basis, you're looking at an 11% growth in PBT, a 21% growth in earnings. So it's pretty interesting with Skye Bank, and we've always liked Skye Bank. You know, if you talk about the tier 2 names, you know, but overall, you know, we still believe that the banking sector is still cheap. And if you're looking at the tier 2 names, you know, if you're looking at 0.4 times book, 2012 book, or 3 times 2012 earnings and 13% yields, I think it's pretty interesting at these levels.
Now, very quickly, what's your take on the rest of the Q3 numbers we're going to see coming out, especially from the banking sector? We're going to see momentum slowing down like we're seeing in UBA quarterly, or, you know, picking up like we're seeing with Skye Bank?
I think with the with the tier one names, we're going to see strong momentum. Don't forget that in recent times we've seen high yields, you know, in the fixed income space, and also considering that these names also have a very low cost of funding, so you know it's a good match for them. And then also, if you consider that you know you're seeing improvements in the economy, you're seeing a lot more transactions happening in the real economy. So I believe that these names will be able to take advantage of that corporate market as well. I think we're going to see a good earnings surprises going forward.